Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's going to be all eyes on Apple today. Apple reports after the close today their quarterly earnings, and by all accounts it looks like it could be a really good quarter for Apple. But the question is, has the price made the adjustment for that great quarter? And right now we're looking at Apple with a score of 60. You can see that right here with our triangles indicating a trading range. And if you look at Apple closely, you can see quite clearly that we've been in this sort of big box for quite some time. We broke out on a little bit on the downside here, but that was a fake out, and we've come right back, and we really need to close over the 134 area or at 134.50. That would turn this triangle green. That's it only if it goes over 134.50 though. That means a new high for Apple. Now whether that happens today or not remains to be seen. We're probably $3 and change away from that right now, and it's anyone's guess, but all eyes on Apple today. And how many watches did they sell? I'm guessing not as many as they'd hoped, but that's another story. Let's go on. Pretty much the same picture. If you look at this in Apple, you see it's a very similar picture. You've had this sort of very broad range of activity, and you sort of popped under here just very briefly, back up, and this is the next level of resistance right here. We need to go over that to get moving to the upside, but right now we're at 55. It's a trading range. We're coming back to support on the 50 line, which is another good sign of support coming into this market. But all in all, really a massive trading range. It has been that way since really the second quarter, and at the end of the first quarter we sort of went into it, and the second quarter was just totally no direction whatsoever. NASDAQ, a little bit of a different picture here. We do have a positive plus 90 score indicating a trend on the upside. You can see quite clearly that we have had a situation where it has been moved up. We've had the breakout over this previous high right here. You can see that we're in new high ground here, which is obviously a very good thing. You're over the 50 line right here, and obviously you have a score of plus 90 indicating a trend that's very positive to the upside. That has not changed. Looking at the S&P 500, that's a situation where you've got this broad trading range we've talked about before, sort of really kind of locked in there. We're still waiting for the green monthly trade triangle to move up to give us a plus 100. It's a 60 score indicating a trading range. However, it's trying to get up there. I think we may see more of a two-way street coming into this market, where we're seeing a situation where we sort of get to this high level and we just sort of maybe do this for a while and then move up and then move up to the upside. It's still too early, but we need to move over these levels if we're going to turn this trade triangle green. This is gold. It does not look good, and we talked about this before, why it collapsed. Actually, it's interesting because the second quarter was a terrible quarter for gold in the sense that it didn't really go anywhere. And now that it's finally moving, you can see that's a regular Western chart. We're going to put a candlestick chart on quite easily by just clicking here. And you can see in the Q2 period, let me just draw that in very quickly for you, which is right around here, gold went nowhere. Really did not go anywhere whatsoever. And it's very hard to make money like this unless you're a short-term trader. The big move, of course, came from the 1180 down to 1080, which is $10,000 a contract. That's a super move. And gold traditionally has had periods where it has nice trends like here and here. So again, this is usually when you get sideways action like this, it's usually portends to a big move either up or down. This is the Eurodollar, and you can see it's had a sort of a history of jumping up and down. We're at the lower end of this range now. Now whether it breaks through here, it remains to be seen, but we're at the lower end of the range. We have a little pop up today, and that could be a little recovery back to maybe the 110 area, 111 area. But strictly speaking, we have a minus 90 indicating the trend is down, and is likely to remain that way until we see further evidence of the market basing out. This is crude oil. One thing I want to show you with crude oil, which I saw, which I think is pretty interesting. Clearly, we've got a minus 90 score, which we can see quite clearly. But the other thing that's interesting is the fact, if you look at the RSI indicator, which we can do right here, and that's going like that. It's really kind of pointed up, but the prices are going like that. So you've got a divergence, and that's normally a sign that you're trying to make a turn. Now you can see quite clearly here, let me scope that in even a little bit closer for you. Let's just do a 3-month chart. You can see here we've got somewhat of a potential piercing line, a Japanese piercing line to the upside. If we close where we are now and then close higher tomorrow, then we should say that there's a good chance that we have put in some sort of a low at $50 for the price of crude oil. Let's see how that plays out, but generally speaking, the trend is your friend, and the friend of the trader right now is on the short side of gold, the crude oil, and the euro. I'm Adam Houston from Market Club. All eyes on Apple this afternoon when it reports its earnings. Let's see what happens in the market till that time period. Remember, the levels we're looking at 134 and 134.50. Have a great trading day, everyone.